Hello everyone, this is Roman Bakamatov and this is our session number 14 of the Wyckoff Trading Institute. We're looking at the Chinese markets through the Wyckoff method, and today we're gonna touch on the new concept, relative strength. This is probably one of the most important concepts in the modern technical analysis that identifies the selection for us. It helps us to understand which assets are much more attractive or not attractive at the specific structural spot. Today, as usual, Joe Goldwyn is with me, but he will not be translating directly. Together with another student of mine, John Tao, they will be translating and putting the subtitles. So just a new way for us to deliver this material to you. Again, thank you so much for all of the emails and the kind words. So thank you for staying and watching all of these videos. All right, so let's look at the chart. On the chart here, we have the airport industry group, and it's a daily chart. Then we have a Shanghai index. Below this, we have a relative strength ratio line, which is constructed by the price of these two instruments. And then we have the volume signature, which belongs to the airport industry group. So let's talk first about the reasons for our relative or comparative analysis. And I want to point your attention to the latest price action that we see in the airport group, which is higher highs, higher lows, and then look at what the market is doing. The market is in a downtrend where we is observing lower highs, lower lows. So the behavior of these two instruments is different. We're seeing that the airport industry group is definitely stronger relative to the index, and the index is relatively weaker. So if we're expecting some kind of reversal out of the oversold area where we could go just based on this trend, right? So we had 2 points of resistance here, we had 1 point of the support. We are projecting that the price might go and touch this support again and might potentially reverse. So if we're expecting this, the question becomes, what do we need to pay attention to? What instrument? And we obviously want to pay attention to the instrument that is stronger than the market. So imagine if the price of the index is going to go up, that's probably going to push everything else up as well. So you want to find the instrument or the stock that is going to be stronger than the market. That's the main idea. Now we could look at the comparative analysis and relative analysis from different perspectives. The comparative analysis would be using the significant highs, which are synchronized significant highs, to significant highs, which is synchronized significant highs. And we could see that the slope is so different for the airport industry group. It's stronger at this point than the market. The market is weaker. Then we could take significant low and compare it to the previous significant low and look at the slope and do the same for the market. And we could see that again, the industry group is stronger than the market. The market is weaker. Then we could look at, let's say, this high right here and compare it to the market's high. So we see that if we would connect the significant highs and significant highs for the industry group, we see that the group is still stronger and the market is still weaker. And then the next low, we're seeing that the slope of this low for the airport group is stronger, bullish, and then the market is weaker. So throughout this whole structure, we've seen that the airport group is much stronger. So it doesn't attract more selling than the market, and it might also attract some of the buying. And therefore, we definitely want to put this on our watch list. We want to look through the stocks. So we did this last time. We looked at the markets, and we are talking about the top-bottom approach. We looked at the markets, then we looked at the sectors, then we are looking at the industry groups, and after that, we need to go to the stocks level and find the stocks that are in the correct structural place, meaning that we are in phases C, D, or early E, and that is outperforming the market, meaning that the institutions are interested in this particular stock more than they are interested in all other stocks in the market. Well, there is another way for us to think about the comparative analysis. It's the relative analysis. And the relative analysis is just a modern version of the comparative analysis. We are looking at the relative strength line. Here is the formula that he gave us, for to construct the relative strength line. And what it is a symbol of a stock or an industry group or a sector, whatever you want to put in there, divided by the price of the index. We don't really care about the numbers here. They just don't mean a lot to us. What we care is the understanding of the trends, relative trends. Because it's price over price, then this means that, we're basically getting the measurement of the price on the relative basis for these two instruments. And if the relative strength line is trending up, like it is right here, since the late 2017, we're seeing that there are higher highs and higher lows. So this is a definition of the uptrend. And if a relative strength line is trending up, this means that the asset under the review is outperforming the market. And please note that it was really evident to us in this area right here that the airports group is outperforming the market. We were seeing how there is an upsloping range that is forming on the way up, whereas in the market we're seeing a downsloping or downtrending environment. So therefore the relative strength is going to show that with the higher highs, higher lows. Now in this area right here, we still could observe higher highs, higher lows. So it's still a definition of the uptrend. So how could this be? Because this suggests that the airport industry group still outperforms the market. Well, even though they are both making higher highs and higher lows, look at the movement. Look at this move right here for the group and look at what the market is doing. So the market is weaker at this spot. And then look at the next rally. And this is where, there might be some kind of outperformance, a very short-term outperformance. So in this area right here, we see that the market is slightly outperforming. But in general, as a long-term trend, we kind of starting to outperform the whole market. So that suggests that institutions are present there, that institutions are favoring this theme over something else, and therefore we should pay attention to this. One of the other things that I want to mention is that it usually depends on the software, how you get the relative strength line. And it's just a very easy visualization of the strength or the weakness coming into the instrument. So the software that my students are using is Tong Da Xin. So please check it out. You have the formula now as to how to construct this. You could just take this formula and insert it into the software and to start collecting the data on the relative strength. So one of the couple of tricks with the relative strength line. Well, first of all, you could create some kind of scans based on that. You could say that you want to find all of the stocks that are exhibiting a certain behavior, like a relative strength breakout. This could be one of the scans, and there could be so many. So if you could find it, it will lead you to the group like this, and then on the next reaction, you could find some points of entry for your trades. You could also, during the downtrend of the market, identify all of the instruments that are going to outperform the market, and therefore, you could visually go through them. But this initial step where you might have thousands of stocks, you could decrease your universe of stocks using the relative strength line and concept to a more manageable number. So a homework for all of you who wants to use the relative strength line is just to go and create it in your software, or to find the way where you could insert it into your charts, and where maybe you could create a scan if you can do that, and just go through the charts and look how the relative strength line behaves. And that's it for today. I wanted to go through these concepts. It's a very important concept for us. So we just want to start with the concept first, and then next week we're going to come back to the industry groups. We definitely want to understand what's happening with the market, especially at this spot. There is still some room where the market could actually, go down before it goes up. We're seeing that, if we would look at the progression to the downside, the way how the price goes down, and compare it to the first decline, we're definitely seeing some kind of diminishing result. So that's encouraging, but we have to see some kind of reversal, the more pronounced reversal, because all of the rallies that we have here are really small, really mediocre. There is really nothing that's going on. So both demand is going down and supply is going down, while the result is decreasing, but we're still traveling to the downside. So it's all associated with the tariff talks, trade talks, and no one wants to come into the market and be aggressive. No one wants to come into the market and actually, buy a significant chunk of the market. So we're in the wait game. Therefore, you have to be careful, you have to wait, and you have to prepare yourself and to look at the assets that are already exhibiting some element of strength. For setting up this video with the subtitles, next time we're going to discuss some industry groups As a homework, please explore and research the relative strength line. Try to put this on your software. Try to print out some charts and look how the relative strength behaves. And as we go through the industry groups and the stocks, we're going to use the relative strength line more and more. Thank you all, and I'll talk to you in a week. Bye-bye.